Hello and welcome to SuperTrader TV. I'm Andrew Sachs-McLeod from LeapRate, and today I'm joined by a very special guest from London, Brian McDonnell, who is a partner at prominent British law firm Addleshaw Goddard. Hello Brian.
Hello Andrew.
Nice to see you.
You too.
So Brian specialises particularly in the legal aspects of the financial services sector, and today we're going to talk about some very important factors that are really prominent matters in the online trading industry. So Brian, yesterday, first of all, welcome to the show.
Thank you very much, good to be here.
And yesterday we spoke at the IVC Research Centre at a particular conference about the current trends within the online sector from within the actual, from a commercial point of view. And actually you came up with some very interesting subjects regarding the potential shift between the way that the binary options and forex sector in Britain is going to go. So by all means, it would be very interesting to hear about that.
Yeah, so the area of online trading is one which is going to be subject to a fair amount of regulatory change over the next couple of years, but in the short term and in the context of the UK and some other EU jurisdictions, there is some imminent change around the regulation of binary options. Binary options are not a financial services regulated product in the UK at the moment. They're regulated by the Gambling Commission. And that's because when the Markets in Financial Instruments Directive, the pan-European legislation which concerns the regulation of investment services and financial instruments was implemented in the UK in 2007, it was decided that binary options were not a financial instrument.
Right.
The European Commission has since then, in late 2012, determined that binary options are a financial instrument and should therefore be regulated under the Markets in Financial Instruments Directive, and therefore a change in the UK law is being proposed by the government. It's out to consultation at the moment. Consultation responses by the 18th of June. It is expected that that binary options will become a regulated financial instrument before the end of the year. The intention is to regulate binary options which are similar to other financial derivatives, where the underlying is a financial instrument such as a share indices, currencies, etc.
Very interesting. I think this is kind of echoing the way that SciSec went. And the thing is, SciSec, just a year before that, in 2011, I believe it was, took the lead in making binary options a financial product which drew lots of binary options brands rather than the actual platform companies. Drew the brands to Cyprus so they could approach the European market under the MiFID, as you say, the MiFID passporting system, and also approach other markets in the Far East with a reputable European license. Now that is very interesting because SciSec is a very easy packaged, not so expensive way of getting into the industry, whereas the FCA is a little more expensive. There's a lot more bureaucracy to go through. London hosts the majority of the institutional financial sector and the financial technology sector now for the world. Binary options is a small sector compared to that. So if it's very comfortable to be in Cyprus from that point of view, but if the European Union starts to disband, as we now can see there's a possibility of Greece exiting, and if the euro continues down and the European Union starts to disband, therefore the MiFID passporting system may not be there. What will happen in terms of licensing? Do you think there'll be a big influx into London?
Yeah. So you raise a number of interesting issues there. First of all, I'm not surprised that SciSec and Cyprus was slightly ahead of the curve in relation to treating binary options as a regulated financial instrument, because of course that enabled firms which are regulated in Cyprus to passport their licenses elsewhere in the EU. And that is the upside of treating binary options as financial instruments under the Markets in Financial Instruments Directive, because therefore you can offer that service via the passport. And of course, if you offer the service via the passport, you're regulated by your home state. And as you say, many online trading companies in the FX and binary sector operate from Cyprus, with SciSec regulated, and are able to offer their services in the other 27 EU states and the 3 states in the European Economic Area, without those host states effectively having any control over the regulation, or have very minimal control over the regulation of those services. That has actually presented some issues for some of the host states. because there are, in the view of some of these regulators, some investor protection issues for their retail customers when you're looking at particularly online trading and online FX trading, which seem to present particular risks. In the UK, for instance, we have about 90 online FX providers in the retail sector. Around 73 of those are passporting in
makes sense,
their services to the UK,
Yeah.
and about 50, I think it's 54 are CISAC regulated.
Right.
So the vast majority are CISAC regulated entities over which the UK regulator has no effective control.
Makes sense, that's right. And the domestic ones are probably CFD firms and institutional companies.
Yeah, there's sort of large IG Index and
Exactly,
City Index.
yeah,
And of course,
exactly.
City Index, who were recently bought out by Gain Capital,
That's
famously
right.
complained last year about the ability of individuals to register as Mickey Mouse.
Yes,
inside
just recently,
regulated
indeed.
entities.
I believe that you might be more experienced in this, but it seems to me as though Gain Capital is it's a publicly listed North American company that has to report all the time, and they're under the NFA. The NFA is probably the most rigorous and most well-organized regulator in the world. In my opinion, it's the only real regulator that actually carries out inspections and disgorgements if something is done wrong. So therefore, these companies are subject to extremely stringent regulations, and they're very, very procedural, and everything's by the book. So then they buy a very well-established company such as City Index for $118 million, 30 years in business. City Index is really a very stalwart of the industry. They then go there, and it's nothing to do with the company they bought, but they have to investigate the regulatory structure.
Yep.
And they find that it is not the same as it is in North America.
Yeah. And one of the problems, or one of the aspects which they'll find is that it doesn't appear necessarily to be a level playing field throughout the EU. So, City Index may be subject to slightly more onerous regulation or a higher standard regulation potentially in the UK under the FCA than perhaps companies who are regulated in Cyprus under CISAC.
Yes. Yes.
Or that's certainly the perception. And there is a direction of travel here because some of these host states are looking to be able to exercise greater power over the financial services which are made available to their retail customers. Last month, the French regulator, the Autorité de Marché Financier, the AMF, announced that the results of their mystery shopping exercise.
They did indeed. They did.
Where they looked at scores of retail online trading providers into France and found a number of them wanting. They were unhappy with some of the anti-money laundering controls.
Yes.
They said that they were able to trade with some providers without adequate KYC having been undertaken. There were insufficient risk warnings to clients. They were not conducting proper appropriateness tests to determine that prospective traders had the right skills and experience and knowledge to undertake the trading, and also they had difficulty getting their money back from some of the platforms when they wanted to close their accounts. So the AMF is looking to prevent access to some of these websites into the French market, and also is looking for legislative action to ban what they describe as risky products. So they would look for that to do that on a domestic basis. Actually, from 2017, a new Markets in Financial Instruments Directive, the second market MiFID recast, will come into effect, and that will require EU member states to have the power to ban risky products, and would also enable the pan-European regulator, the European Securities and Markets Authority, also to ban risky products. So one must assume that online trading, and particularly online FX trading in the retail space, is potentially at risk from some sort of banning action.
Well, it seems to me as though those particular companies, from my research, seem to be not French companies. They are effectively companies based outside France with French-speaking sales staff, and they operate on a profit and loss model. So the idea is that they will take the deposit from the end user, and they will deposit online, and then they will operate in a profit and loss model. And I think most of this is not within France, which is why the AMF is doing that, mystery shopping exercises, because they have no jurisdiction over non-European, maybe North African or Middle Eastern companies that are attracting French customers through their French-speaking customer base, sales force. Yeah. And that I think is the thing. So I wonder whether it is, we've seen some companies who offer retail forex, like INFX. We've seen Admiral Markets. They've gone to London and gone. They started in Cyprus, built themselves a very good business, and then got the FCA licenses. So I wonder whether many might follow suit because they are concerned about the aspect of multi-jurisdiction regulation, but also that the FCA will always be the FCA, even if there is no longer any European passporting.
Yeah, so absolutely. Just going back to the French aspect, I mean, I should of course say, and as you've said, that many of the providers that were looked at were non-EU and didn't have any regulations.
Yes,
some, however, were regulated in the EU and in Cyprus in particular. Yes. So, what reasons might an online trader have to be regulated in the UK? Well, the FCA is seen as representing a bit of a gold standard in regulation.
Yes,
it doesn't mean that it's the most onerous of regulators. In many respects, it isn't. But it is seen as a safe haven.
Right. Well, it's a fascinating point because it is seen as a safe haven because it is an institutional trading centre. But 97% of the time, if there's a complaint or an irregularity, that no compliance inspection is done. Instead, the FCA sends a letter to the alleged company that might have done something, saying this customer says that you did this. The company has a choice. They can either contest it or they can pay a fine with a 30% discount. They just pay and then carry on as normal. There's never any inspections done. But despite that, it has, as you say, a gold standard reputation, which is remarkable, really. So I wonder whether. You're saying about. I remember yesterday you said something which really stood out in my mind at the conference that we were at, the IVC Research Centre, that going towards regulation in the UK for binary options on these particular platforms, retail platforms, is a done deal, and that is quite interesting because I think the UK, as South Africa, Australia, other Commonwealth countries, gambling is legal. It's not illegal. It's not legal here. It's not legal in the US. It's not legal in It's legal in Britain. So they don't know that. I wonder whether they are now starting to look towards differentiating between binary options or spread betting and things that go under the tax laws of, because gambling is legal, there's no tax, and it's okay to do so. Whether they may go towards the more spot orientated systems that we see abroad and maybe see some kind of a tax revenue to be able to be collected from this.
By seeking to escape the regulatory net? Or
well, to make it into a financial product rather than a gaming product, and then it's taxable as earnings rather than a gaming system.
Yeah, so I can certainly see there might be some tax arbitrage opportunities.
Yes.
Although in relation to binary options, it looks as though at the moment, although of course this is still open to consultation, that the UK is looking to refine the types of instrument which would be binary options to underlyings which are financial as opposed to non-financial. So there may be a little less scope for that.
That's interesting. I mean, let's move to perhaps completely the other side of the scale, which is something which Britain is also looking at, as well as many other regulators around the world. But Britain is looking at high-frequency trading, which is very much an institutional practice of gaining seeking to gain an advantage over other participants by using extremely high technology and very low latency systems and high speed processing in computers, as well as algorithms. Now, America has New York and Chicago, the institutional trading desks of New York and Chicago. Algo trading is prominent. Proprietary trading using on their own accounts using systems like that is part of the US financial and technology structure. But other nations haven't been so favourable with it. And we saw last week that in Hounslow in West London, a particular trader managed to contribute allegedly to the flash crash in 2010 by almost executing trades and then cancelling them quickly, to the point where he managed to profit 27 million, and now he's in big trouble for that.
Yeah.
But I think it was because he lives near the Equinix LD4 server in West London. He was able to just gain that slight advantage on latency. But what is the UK current legal perspective and future regulatory perspective on HFT? Is UK with America, or is UK going to take a different stance like Germany, who pretty much tried to put a stop to it?
Yeah, so first of all, I mean, I should say that the UK is pretty clear that layering or spoofing, which Sarah is alleged to have undertaken, is illegal. It's market abuse.
It is indeed,
in the UK, and that's a pan-European market abuse regime, so one assumes that similar behaviour is legal anywhere in the EU, because, of course, that type of behaviour gives a misleading impression as to the supply in the market.
That's probably pretty much illegal everywhere, I would imagine.
I would have thought so, yeah. And of course, whether or not it's illegal, actually, from sort of the legal niceties, might come down to the intent of Mr. Sarro. But the fact that he appears to have been responsible for tens of thousands of trades per day, and many of which or most of which were actually cancelled, suggests that he probably didn't have a legitimate commercial intent to trade on the basis of those.
That's right.
Rather to move the order book and profit from that movement. So yes. The regulation of high frequency trading in algos again is subject to pan-European regulation. It's dealt with in the second Market and Financial Instruments Directive, which is currently going through the legislative process and will be implemented in early 2017. So it's still got a good 18 months before that. But that will make it more difficult for high frequency traders. First of all. High-frequency traders will need to be regulated. Many are currently unregulated and are able to benefit from exemptions.
Some companies are actually doing it themselves. They didn't actually go ahead with it, but I remember EBS, which is a part of ICAP, British Interdealer Broker, they were actually talking about programming into their system a latency floor, so that they didn't want any HFT order flow. So they wanted to have a 3 millisecond latency floor so that you couldn't possibly execute anything less than 3 milliseconds. So some of it's self-regulated, but I wonder whether that's the way to go, or whether the government might just say, okay, we're going to now pass this blanket law on HFT.
Yeah, so there'll be a regulation of HFT providers. I mean, that's going to come down to what your definition of high frequency is, and that's something which ESMA has advised the European Commission on. The European Commission is where it going to tell us all what it considers to be high frequency this summer, and that will probably be a function of the number of trades or messages that can be submitted per second to a trading venue in relation to a particular financial instrument on trading venue.
That's right.
And not only is there regulation proposed of high-frequency traders and algorithmic trading, high-frequency trading is sort of a subset of algorithmic trading, but also there is regulation around co-location, which you've mentioned, and the fact that where a trading venue offers the opportunity for co-location, it should be offered on a sort of non-discriminatory basis. And then also, as you've mentioned, where an investment firm offers direct market access from third parties through its system onto a trading venue, then it has to have appropriate systems and controls in place as well. And as you mentioned, one of those controls might be in relation to a minimum latency.
That's what I wondered, because if let's say you're a venue rather than a national OTC system, and you're a venue, electronic venue, and you're doing complete direct market access, and there are some laws about HFT, who is liable? Let's say I am a big company and I'm processing tens of thousands of messages, and then I submit them all to somewhere like CME Europe or Euronext, or one of the main clearing centres in London, and then they process it straight out to the provider, and I'm actually using some kind of algorithm which is not legal. Then who's liable?
I think that's a very interesting question, because at the moment there is already some regulation regarding companies that do offer that type of market access, and they need to exercise some level of oversight and monitoring of the third party's trading activity. The new law under MiFID II will take that to a new level, and there will be a point at which the regulator will be able to say to the party that's facilitating that sort of access, well, why didn't you have the relevant systems and controls to monitor that, and why didn't you detect the market abuse? And there is provision in the market abuse law in relation to third parties that require or encourage that market abuse. And you could take a view that, as someone who's facilitating that abusive access is requiring or encouraging that market abuse. I think it does present a risk.
I think so. And that's interesting, because I can envisage this. I know that most of the time, if something comes up that is to do with a chain of events like that, a message goes from here, through here, through here, through here, then a complaint happens because something goes wrong. And they say, okay, you failed to supervise. Your company failed to supervise, so therefore we're going to put sanctions for failing to supervise. But then they'll say, well, how do we fail to supervise? Because we're a direct market access company. We process the order straight through. We don't supervise. They submit. We guarantee our contract with the supplier is direct market access. We guarantee them split-second latency straight through to market. So then the regulator comes and says, well, you failed to supervise. What did we fail to supervise? We are a DMA company. So there may be some kind of conflict in the end between who is really responsible for that.
Yeah, although I expect that the sorts of behaviours that we'd be looking at wouldn't be one-off. There'd be a pattern of behaviour over a period of time, as there was in the case of Mr. Sarro, where where it might become obvious.
Yes, yes.
That behaviour was potentially abusive.
Yes, and then they could probably go after the end user. That.
Yeah.
Like they did with Mr. Sarro.
Yeah.
He was obviously using a kind of a direct market access system to get through to CME in Chicago.
Yeah, I think the broker that he used actually is bust. So yeah.
Right. Yeah, makes sense. That's very interesting indeed, and certainly I'd like to talk more about that, and we'll certainly cover that in future shows. And thank you very much for joining us today, Brian.
My pleasure, Andrew, really.
Absolute pleasure to speak to you, and some very valuable information. Just lastly, do enjoy your last couple of days in Israel.
I will do. It's great here. I really enjoyed it.
Very pleased to hear that. Thank you for joining us.
Thanks, Andrew. Cheers.
I'm Andrew Sachs-McLeod from LeapRate. This is SuperTrader TV. Join us again next week. Goodbye.